Hello and welcome back to Money Moves Daily, your Gulf Report. It's Wednesday, September 3rd. I'm Sophia Reyes.
And I'm Jason Miller. Sophia, the market picture is a bit mixed today, but certainly not boring. Brent crude is holding steady around $69 a barrel, but we've seen some interesting movements across the region's bourses. The Qatar Stock Exchange, for instance, saw a slight dip of 0.42% yesterday, while Dubai's market remains absolutely red hot.
Absolutely, Jason. And the big story we're diving into today reveals a fascinating shift in the landscape of regional financial power. A new report shows Abu Dhabi's Mubadala has actually surpassed Saudi Arabia's PIF as the leading sovereign wealth fund investor in 2024. We'll dissect what that means for both the UAE and Saudi Arabia's ambitious diversification plans.
Plus, we've got eye-popping numbers from Dubai's real estate market that continue to defy global trends, and a look at why everyone is watching the upcoming OPEC Plus meeting this weekend. So let's get into it.
All right, Jason, let's start with this significant development. Abu Dhabi's Mubadala Investment Company. A recent report indicates they deployed a staggering $29.2 billion across 52 deals in 2024, representing a 67% surge from the previous year. This propelled them past Saudi Arabia's PIF, which saw its investments fall by 37% to $19.9 billion in the same period.
Wow, that's a massive shift. The PIF has been in the headlines so much with its gigaprojects and global investments. What's driving this change? Is Mubadala suddenly more aggressive, or is the PIF pulling back?
It's a bit of both, but fundamentally, it highlights a difference in strategy. Mubadala has maintained an aggressive global investment strategy, with a significant portion, around 85% of its capital, directed towards developed markets, particularly the United States. They're heavily invested in future-focused sectors like artificial intelligence, technology, life sciences, and healthcare.
The PIF, on the other hand, has been intentionally shifting its focus. While still a global player, its priority has increasingly become supporting domestic initiatives and Saudi Vision 2030, with a stated aim to reduce foreign investments to around 20% by 2030.
So while Mubadala is looking outward to diversify its portfolio across the globe, the PIF is really doubling down on building Saudi Arabia from within. Does this create a healthy competition, or are their goals distinct enough that they're not really in direct rivalry? And what does this domestic focus for PIF mean for all those ambitious gigaprojects like NEOM and Qiddiya? Their goals are complementary, but their strategies are diverging. Mubadala aims for global diversification and stable long-term returns, seeing its assets under management at $330 billion. The PIF, with its immense $1.2 trillion in assets, is the engine of Vision 2030. Its domestic pivot means more capital is flowing directly into those gigaprojects, new industries like tourism and tech, and job creation within the kingdom. This shift is crucial for their non-oil GDP growth targets. So it's less direct competition for the same deals and more a reflection of their distinct national economic agendas.
That makes a lot of sense. Speaking of economic transformation, I'm constantly seeing new images and videos of Dubai's skyline changing almost daily. It feels like the city is in a constant state of boom. What's the latest in the real estate market there?
You're not wrong, Jason. Dubai's real estate market is indeed experiencing a historic surge. In August 2025 alone, the market recorded approximately AED 51.49 billion, that's over 14 billion USD, in property transactions. This marks an 8.7% increase in value compared to August 2024, with total transactions rising by almost 16% year on year.
We're seeing apartment sales jump by nearly 30% and commercial property sales increasing over 20%.
That's incredible, especially with global interest rates still elevated. What's driving this sustained demand? Is it all luxury, or are we seeing broad growth? And for someone thinking about moving or investing there, is this sustainable? It's a confluence of factors creating this perfect storm. Dubai continues to be seen as a safe haven for global wealth, attracting a significant influx of high net worth individuals and capital, often due to geopolitical instability elsewhere. The UAE's proactive visa reforms, its appeal as a global business hub, and robust economic growth are also major draws. While luxury villas and high-end apartments in areas like Palm Jumeirah and Business Bay are leading the charge with prime prices up significantly, the demand is broad and off-plan projects are particularly popular. The market is seeing organic growth, and while the pace is rapid, sustained population growth and government initiatives aim to ensure long-term stability.
It sounds like Dubai is truly carving out its own economic destiny, regardless of global headwinds. All right, let's quickly pivot to some other headlines making money moves across the Gulf. Sophia, what's in our quick hits today?
First up, Saudi Arabia's non-listed corporate debt has seen a remarkable surge, jumping over 500%. This indicates significant investor diversification within the kingdom's private sector, aligning with Vision 2030's broader economic goals.
Diversification, always a key theme. What else?
Over in Qatar, the stock exchange saw its QE index dip slightly yesterday, but it's worth noting the Qatar Central Bank recently launched its first public debt auction, signaling new financial instruments entering the market. And on a lighter, yet strategically important note for Saudi Arabia's tourism sector, Cristiano Ronaldo is headlining their Unreal Calendar campaign. It's a clear move to leverage global celebrity to showcase the kingdom beyond its traditional image, linking directly to the "I came for football, I stayed for more" message.
Smart move there, tapping into that global appeal. Finally, what should our listeners be keeping an eye on in the next 24 to 48 hours?
The most critical event on the horizon is the upcoming OPEC Plus meeting this weekend, specifically on September 7th. Market watchers will be closely scrutinizing their decision on oil output levels for October. While most analysts anticipate the group will maintain current supply levels, any surprise decision could significantly impact global crude prices, which are currently holding around $69 a barrel for Brent.
Right. Oil prices are always a big deal for this region, so a steady hand from OPEC Plus would mean continued stability in energy markets, but any deviation could inject volatility. That's definitely one to watch.
Exactly. The implications for the budgets and investment strategies of these oil-exporting nations are substantial.
And that brings us to the end of another Money Moves Daily Gulf Report. Sophia, thanks for breaking down these complex stories with your usual sharp analysis.
My pleasure, Jason. Always great to discuss these vital developments with you.
And to our listeners, remember, whether it's a sovereign wealth fund making big moves, a property market defying expectations, or critical decisions from OPEC+, the Gulf is a dynamic economic force shaping the global landscape. We hope you feel more informed and ready to make your own money moves.
Be sure to subscribe and share this podcast with anyone interested in the evolving financial heartbeat of the Middle East.
Join us again tomorrow for more essential insights. Until then, I'm Jason Miller.
And I'm Sophia Reyes.